All right, welcome back, everybody. Ratings agency Fitch has kept South Africa's credit rating unchanged and has maintained a negative outlook with one notch below investment grade. Fitch says the country's ratings are affected by high and rising government debt, low economic growth, and the dire financial status of state-owned entities. According to the ratings agency, proposed legislation on land expropriation and the discussion around the nationalisation of the South African Reserve Bank has created uncertainty among investors. Joining us now, just to get a little bit more of an understanding, we've got Ryan Hawthorne. He's an economist from Acacia Economics. Good to see you, Ryan. Thanks so much for coming in.
Thanks.
So we look at the ratings agency coming out yesterday. I suppose there wasn't really too much talk about it. Was it expected that they would do what they did?
I don't really know if it was expected, but they certainly maintained the same rating, so it wasn't a big shock with the direction that they went in.
Which I suppose it's still not good for the country because, I mean, we're still sitting at a negative outlook with one notch below junk status. So that's still not looking good.
No, it isn't looking good. They raise concerns mainly about our economic growth rates, which is well below our peer countries. So we're growing this year probably at about 0.5% or so, and our peer countries in that double B group are growing at more like 3%. And so really that's what they're concerned about.
Yeah, I mean, if we look at how government reacted to this, I mean, they were basically saying the Treasury has taken note of the rating and that it will remain committed to stabilising and improving its fiscal position. It's been saying this over and over again, and yet that confidence still doesn't seem to be coming. What do they need to do?
I think that's really the big question. It's a question of delivery. The government's actually got very good policies, particularly the National Treasury, and they've proposed a whole number of reforms in a number of areas, in transport, in healthcare, in electricity generation, and so on. And I think it's a question now of delivery against those reform proposals.
Yeah, and delivery is what many people are waiting for, and outside investors. I mean, you know, you talk to people wanting to invest in an attractive destination. You as an investor, as an economist, would you say that South Africa is an attractive destination to invest in?
I would say that South Africa's got many, many opportunities. I think it's a very exciting place to be actually. And but there are big risks at the moment. And for example, it's quite difficult to commit to a big mining investment if there's uncertainty as to power supply, for example. There are massive constraints at the ports. We've got very expensive ports, very inefficient ports. Similarly, in in passenger transport, in freight transport. So I think there's a number of government monopolies and reforms that need to be implemented. And I would say once those have been implemented, there's massive opportunities for investors.
Yeah. I want to talk exciting opportunities because you mentioned that. Where would you say that there are exciting opportunities to invest in the country?
So, for example, there are some quite exciting oil and gas findings that need exploration. In respect of passenger transport at the moment, the Gautrain expansion is a massive investment that will involve a public-private partnership. There are a number of opportunities, certainly in tourism. And again, provided that the government provides space to allow the private sector in, very much in energy as well. President Ramaphosa published an article yesterday or the day before saying how there are massive changes happening in the energy sector and huge opportunities for growth there.
Yeah, I mean, look, the energy sector, I think, is one of the biggest problems. As soon as South Africa reached stage 6 load shedding, I think alarm bells were going off all over the place. Obviously, there's a bit of a lull right now. You're also seeing industry down because it is holiday season, festive season, so we're not operating at our maximum. However, when it's back to business next year, that's when we may start seeing all these problems taking place again. When it comes to Eskom, when it comes to our SOEs, and I think Eskom being the most worrisome, or would you agree?
Yes,
the most worrisome
I would say
now.
Eskom is a very worrisome entity. I think there are massive inefficiencies and governance problems there that have been a problem for many, many years now. But there are other SOEs as well that also are in need of reform, such as so we talk a lot about breaking up Eskom and delivering against that, but the same needs to happen in respect of freight rail. In respect of passenger rail, there's some reforms that are proposed there to allow greater flexibility, private participation. So there are reforms needed in a whole number of areas, I would say.
So the reforms and the way forward is there. They've been published, they've been spoken to. I mean, you talk to exciting developments with regard to electricity. It's implementing them and actually making them happen. IPPs, I mean, that's always got the big question mark over it, and many people wanting to see South Africa go in that direction. Is that perhaps one of the saving graces we can look towards?
Absolutely. There's a huge opportunity for IPPs, and the government, as President Ramaphosa said in his article yesterday, has published its final integrated resource plan, which proposes massive growth in renewable energy and hopefully IPPs supplying that renewable energy. And so I think there are enormous opportunities there. The question is just to unleash it.
Yeah. Look, it hasn't been an easy year for South Africa. Growth has been almost non-existent. We've seen SOEs crumbling in front of our eyes, and that's the reality. And it's been tough. But looking forward, let's look to 2020, into the new year. What do we need to do from the get-go?
Well, I think the main thing is to implement a number of the reforms that have been proposed by the Treasury that are set out in government policy. These include, for example, releasing spectrum for the mobile operators to use. As I said, considering more reforms in passenger transport and in freight transport, opening up those markets, allowing the IPPs to start building and all of these renewable projects to start construction. The reforms in healthcare are very much needed. We talk, for example, about the fourth industrial revolution, but there are actually much more basic reforms that are needed, such as the fact that 80% of our public schools don't have a classroom in which school kids can access the internet. So I think our problems are actually not perhaps that complicated, and there's some quite basic reforms that can be implemented that can unleash a lot of opportunity.
Yeah, I mean, opportunity is certainly one way of looking at our problems, is that we can solve them. It is something that's needed. I mean, we've got the budget that'll come up next year. These are fine balancing acts that need to be met here. It's quite incredible. We always say that this is perhaps going to be the hardest budget that the finance minister's ever had. We say that every single year. Yeah. But I truly believe that this one coming up is going to be one of the hardest ones, particularly with regard to these breaking up of state enterprises into different divisions and how we save them. I mean, we look at SAA. We haven't even spoken to SAA, which is sucking money from the state. They're big problems on our plate next year, but there's hope.
I think there is hope. I think that we're in very good hands. We've got a very conservative finance minister and ministry. We've got a very conservative Reserve Bank governor. And I think that all of that means stability in the parts that really, really matter for the economy and for the rating agencies, certainly, I would think.
Well, listen, we're looking forward to what happens next year and seeing how the ratings agencies, I think the next one, we were trying to discuss it off air. The next one to look at our rating could be Moody's, and I think so. Possibly around March. I'm not too sure. We'll investigate that, but there's another one coming up. But the one we were looking at was yesterday's rating agency, Fitch, keeping South Africa's credit rating unchanged and maintaining that negative outlook. Ryan Hawthorne is an economist from Acacia Economics talking to us about this ratings agency and looking at the economy going forward. All right, let's take a break. Initiation.